Scott, thanks for joining us today. Really appreciate you coming here and being part of this. Slower than easy. What a great place to be today. First question I had for you was, when we think about the market structure reforms in the US Treasury market, there's many similarities with what happened with Dodd-Frank for OTC derivatives. How do you think about that? Do you think there are similarities? What are the differences? Where do you see the opportunities, challenges? How are you thinking about that?
Yeah, thanks, Paul, and thanks for having me here today on the floor. I think there's a lot of similarities. I mean, I think when I think back to Dodd-Frank in 2008, 2009, and kind of the world kind of figuring out what OTC clearing was going to look like. It was waiting for clarity on the regulation. It was waiting for when do we start clearing, right, and when do clients want to start clearing, right? And I think that's kind of where we're at a little bit with U.S. Treasury clearing is obviously dates have been extended a little bit, kind of like figuring out the detail of like what this world's going to look like. And I think for me, when we talk about OTC clearing, that feels very similar, right? Where it was our client's going to clear ahead of when they're mandated. How does it work with the clearinghouse in terms of like the world of bilateral moving into the cleared space, and how do those worlds collide, right? And I think at the time it was kind of like, how do you take the futures clearing model and apply it to the bilateral cleared swap world or to the swap world? I think U.S. Treasury clearing feels a lot similar to me like that, and I think obviously the evolution of OTC clearing, we've seen the benefit of the products moving into the cleared space, the cross-margin opportunities that come with that, and kind of the evolution of that. So I'm excited to see what happens with Treasury clearing. It seems like it's going to be on a similar path to the OTC space. So it's going to be interesting over the next year to see how this plays out.
One of the things I often think about is the rules are much less prescriptive, which leaves a lot more room for innovation and different models. At the same time, as a client, that's more optionality, more confusion, more challenges. Where do you think it ends in terms of where do you think the model settles out? Do you think it's a foregone conclusion that we end up with a futures-style clearing solution, or do you think it could be different for U.S. Treasuries?
Yeah, as a futures person by background, I'll be biased and say I hope it goes the route of futures. I mean, I think, to your point, I think everyone's kind of in that figuring out period now of what does this look like and what clients want to trade it and clear it when. I think it seems to be trending that direction. I think when we talk to clients, I think they're all trying to understand what the world looks like in that space. And so, yeah, I think realistically it'll go the cleared space. I think it just then depends on all the participants that are looking to move into that space and want to offer a cleared model. What does that look like? So I think it seems like it's going that route. Obviously, the next 12 months will be key to kind of seeing where that lands, but it seems like it's on that direction.
You operate one of the largest, probably most complex global clearing businesses at SocGen. I guess the challenge has to be, how do you operate that with resiliency and safety and security every day, but yet balance that with the need to be innovative and competitive and think about what's around the next corner? How do you think about innovation, and what are your key priorities when you think about innovating for clients, and how do you stay focused on that against the backdrop of a very complex business operation?
It's a great question. I mean, in the futures business, we've been in that business for over 40 years through various entities that SocGen kind of has acquired over the years, and for us, we've got probably one of the widest depths of direct clearing membership. So that's part of one of the things that we focus on is access to the markets for our customers, and how do we make sure that we're giving them access to the products and the markets they want to trade. And I think over time, we've built our client base to have access to those markets, and that's led us to have a very diversified client base across asset managers, hedge funds, commercial hedgers, market makers, CTAs, that whole dynamic. And so for us, because of the diversification of our client base, that helps us to drive volume, obviously for markets like ICE. Generally we're one of the largest volume FCMs that are out there. And so for us, we have to build a robust model that can handle that volume, right? And that's one of the things that we pride ourselves on is speed of clearing, efficiency of clearing, managing that risk together with customers, with the exchanges and clearinghouses. We view that as a value add and really a differentiator for us. One of the big priorities that we had over the last year or so in our post-trade space, we were replacing a vendor tool with a proprietary technology system that we use for trade capture. We're now live on pretty much all global markets with that. And for us, we view that as a differentiator in terms of our speed of being able to clear and handle volume and get that information out to our customers, right? With intelligent clearing, and we talk about that kind of intelligent, efficient clearing, making sure that we're capturing trade values, trade tagging, all the things that are relevant to make sure that trades are booked in the right fashion and managing that risk together. For us, our platform needs to be resilient because of the volume that we're doing, and so we're constantly looking how do we ensure that we're preparing for the next volatile period where we may see volume spike like happened in Q1 this year. What are we doing to prepare for that and get advanced so that we're not, reacting in the middle of a high volatile market? So looking at volumes, projecting our volumes, kind of looking at our client base and talking to them, talking to the exchanges. How do we make sure that we're preparing for that next element that's out there and making sure our technology stack is prepared to deal with that?
So when you think about Treasury clearing, largest market in the world, our largest bond market in the world, one of the largest markets in the world, volume is a key consideration, right? And obviously some of the complexity we talked about with different rules, different options, different potential paths this could go. How were you thinking about preparing for Treasury clearing? Do you see it as an opportunity? I'm assuming you do, but at the same time, it's a complex problem. How are you thinking about preparing for that?
I think, for us, we're obviously talking to people like yourselves as often as we can to make sure we're hearing what the ICE view is on it, talking to our customers, talking to the regulators and trying to kind of figure out, okay, as we prepare for this new world, what do we need to be doing? What technology do we need to be investing in? How does that change our current, fixed income PB model, right? And so I think it's a lot of information gathering and then figuring out, what the support model is that's tied to that. So I think for us, we continue to look at, prioritizing this over, the next, several months. But I think there's a lot of unknowns still, right? And kind of figuring out what this world looks like. So it's something we're following closely. We're talking to our customers. There's a lot of people asking about it. So we want to be, at the forefront of all the discussions. Then from there, hopefully we build out the model that, when it's ready and the market's time to go and customers are ready to start doing the activity, hopefully we can be prepared for that.
Sure. You talked a little bit about technology and resiliency, and that comes through as a key priority for you guys. What are your biggest priorities in that, or what are your biggest innovations and things you're focused on that space?
So, at SocGen within our prime services offering, we talked about our technology platform in the future space. We're also preparing our platform to be able to support clearing of single name credit default swaps, which would clear on ICE credit. That's something we've been looking to do for quite some time, and we're excited about starting that process over this year, and hopefully something we're going live with next year. Have a lot of demand for it from clients that are looking for capacity to clear single names at their FCM. So something we're really excited about. Within the equity PB space, which is slightly different than my perimeter, that's a big push for our prime business is building out and enhancing our equity PB business. We've seen certain providers in this space that have moved away from kind of the equity PB world, and we view that, talking to our customers, they're looking for another global European bank to be able to provide that space, right? Whether it's cash equities, whether it's synthetic equities. So that's a huge area of opportunity for us and one that we're excited about. We've been building it out over the last year or so, and that's going to continue over the next few years. Obviously, preparing for U.S. Treasury clearing is an element that we continue to follow. Crypto, obviously, there's a lot going on in that space. In the FCM world, there's constantly new crypto products that are being launched. And how do we prepare for those, right? We do support clearing of crypto futures products in certain capacities in our platform, but looking at the new elements that are coming out, there's everyone talks about perpetual futures and how does that work with crypto, and so for us, it's always a balance of assessing new products as they're coming out and talking to clients, figuring out the demand for it, and then on our side figuring out the complexity of it, right? So is this a vanilla contract that kind of falls into our existing operating and risk model, or is there nuance to this that makes it more complex from a trading or clearing perspective, where we need to be looking at things through a different lens so that we manage the risk properly? And so as exchanges are launching new contracts all the time, whether it's crypto or traditional financial futures or commodity futures, and for us it's really working and partnering with the exchanges and clearinghouses to understand how the product will work and making sure that we're giving feedback on how we think can be managed best, and then collectively, hopefully, we're in a position to support products when they go live, and be in a position to support customers that want to start trading it as the product is launched.
I mean, it's interesting. It's surprisingly competitive if you think about it. Like the fact that you're launching the CDS offering, for example, or thinking about that. What is it that makes it continue to evolve and be competitive? Do businesses dip in and do they dip out? Like what kind of happens to make something that seems like it's sort of set and working, and then suddenly you want to compete? And what is that kind of decision process like, and what makes you think about competing in something new or doing something different?
It's a great question. I mean, the FCM space, right? Futures is a long-standing industry, right? And I think what we've seen over the years, in reality, there's been a lot of compression in that space, right? I'd say go back, 20 years ago, I think there was around 100 or so FCMs. Now,
Is that right?
Yeah, there's around 100 or so. I think there's around 50 or so now. So like we've seen compression in that space. Obviously, in a period of time where, there was lower volatility and lower interest rates for an FCM, that's more of a challenging market structure to generate revenue and commercially to be beneficial. Obviously, in the last year or so, we've seen heightened rates and more volatility, which from an FCM business model perspective is obviously carries risk with it as well, but that's a good commercial opportunity. And we see that, I think, we see that with people looking at the FCM space and want to getting into the FCM space. We've seen some recent acquisitions of FCMs by people that are looking to get into it, whether that's people that are more crypto focused, whether that's people that are looking to diversify their FCM with another client base, whether that's people that are looking at an offering they have with perpetual and other products that they want to be able to clear those, right? Then you get into kind of event contracts and those areas that people are saying, well, to do this I need to have an FCM. Even in the U.S. Treasury clearing concept, I think there's people that have historically been in the fixed space and the dealer space that now are saying, do I need to have an FCM to prepare for that? When that happens. And so I think it's an interesting time in the FCM space. Obviously, there's a lot of change, there's a lot of growth, there's a lot of new entrants in the space, so it's an exciting time. And I think there's a lot going on. And for us, it's kind of making sure that we're partnering with the right people to position ourselves and talk to our clients and figure out what they need and make sure that we're preparing accordingly.
In the challenge with some of those new competitors, like to some degree, maybe you might argue some of them are sort of tourists see an opportunity. You guys have been doing this for a very long time and you're very good at it. How do you think about sort of staying nimble when the reality is it's a big operation and you got to move it around, and be responsive to some of these opportunities that come up? Like, how do you talk to clients about that idea of being nimble?
It's one that we talk about a lot, especially with our size in the FCM space. One of the things that we're constantly managing is our exposure in these markets, right? And what's our level of comfort, being market share, right? What is a good target for us? And so oftentimes we're talking to exchanges, we're talking to clients and saying, okay, we want to grow in certain areas. Clients are looking, say, commodities, for example, they're looking for opportunities to grow their commodities footprint. And so for us, figuring out, okay, how do we position ourselves accordingly? And that's at times assessing our overall exposure in a market and figuring out, is there areas that we can expand our footprint? Do we need to optimize and make sure that we've got the right dynamic of clients that we're offering that service to? And that's part of it too, I think, for us, because of our diversified client base, that helps us kind of have, depending on the products, sometimes a balanced book, right? We're always trying to kind of have a well-balanced book where we're not necessarily too directional in any particular product as we're sorting it. So having a diversified client base helps that. But also it's just being proactive and understanding what the market's looking for and making sure that we're thinking of that. And with that, I think talking to, our peers, right? And understanding where they're at. One of the interesting things about the FCM space, the cleared space, yes, we have our business, yes, we have our clients, but there's codependencies on other clearing members, right? Where we're all in this ecosystem together. And so how do we make sure that we're all managing that risk together? And for us, talking about indirect counterparty exposure, indirect risk, for other counterparties that may not be a customer of us, we need to manage that risk carefully, right? And be mindful of that. And so all those things come to consideration when we're thinking about our market share in a particular space, and how do we make sure we're, having the capacity available for our customers when they need to trade and support those products.
Yep. Interesting. And when I think about treasuries, it's such a huge market. Like, if and when it goes cleared, like that could be a really interesting tipping point for the markets. You may see other government bond markets start to think about clearing, maybe thinking about the resiliency and risk management tools that come with clearing, but that's a lot to take on. What do you see as the biggest sort of competitive trends or just industry trends in clearing overall? Like, it's clearly more things are going cleared, the market just gets bigger, there's more capacity needed. There's a lot of micro things like this product, that product, but what do you think are the bigger picture trends in the space for you and your competitors?
Yeah, I think obviously in the regulatory space there's a lot going on, right? I think, Treasury clearing and other products, I think there's a need for clarity in certain of these products, right, as they're being considered, right? Whether that's the vertical clearing model and conflicts of interest, whether it's, event contracts, right, which, perpetuals and things of that nature, whether it's U.S. Treasury clearing. I think when I go back to clearing and back to our discussion on OTC clearing, as OTC moved in, one of the interesting things for me was learning about the bilateral space is compared to clearing. The clearinghouse is the record, right? That is the voice of reason, and that's ultimately how the transaction cleared. And so you have certainty of clearing, you have guarantee of clearing in that capacity, right? And I think to me, that's the benefit of the cleared model, is you have certainty of that, right? And so thinking about treasuries or new products coming into the space, to me it's important to have a clear view on what to expect, right? Because people can trade with certainty that the products are going to clear, and so how do we make sure from a regulatory perspective we have that same clarity and we prepare accordingly for that? And I think for treasuries, hopefully that same rule applies, where it just adds to the certainty of the market, which should help better for risk management perspective and should help drive liquidity even more. So to me, I think the more that regulatory environment is clear and transparent, I think everyone can position themselves better to trade and to hopefully continue to grow that space.